weekly. All right, this is GBP USD. If we start it from the weekly time frame, we'll pay attention to the active structure. What is the active structure here? This is the active structure on my screen. The one I'm going to cycle here, the one I'm going to engulf or include. This is the active structure right now. Now we want to see how, because this weekly time frame, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, about 19 to 20 weeks. That's not a small move, right? So now we want to use this part to follow to trace it, to trace the movements up, down, up, down. Look at it. Okay, right now currently the price is down. It has not, the price is down, but then the momentum is up. The trend is up. If you put this thing here, these are supports. These are supports. The momentum is up, but then the current price is on the downside. But then we cannot say the market has completely changed to downtrend because of this, because the market has not broken below here. The last low, the market has not broken below it. It's still selling above that low. That means if the market should break below this low, the structure of the market would shift to a total downtrend. But right now, it's still trading above it. That means the buyers are quite still in control of the market. Okay, so now we've been able to have a weekly trace out. Let's have the daily trace out and see what happens. Although from the weekly, we are beginning to see momentum that buyers are indicating interest in getting into the market, but there's no strong confirmation that they have entered. I'm tracing this market based on the impulse and the corrective move. Now, you can also see that currently the price is down. The price is down, the trend is up. Observe, the price is down, like the market has been selling for quite some days, but then it's still on the uptrend. So what does this tell you? To tell you that you should be selling it until this market gives you a reason to buy, which we are going to see. We don't buy. Although we are beginning to, for position traders, for swing traders who might want to get in quite early, some traders might get into this market right from here. If this thing should close in maybe by 11 o'clock, some traders will get in there and set their stop loss here and then take their take profit above here, which is a proper 1 to 2 weeks to reward, and they will leave it. Anything that happens, it's none of their business. But it's still quite early. Some traders can take it. I'm not taking it as a day trader, not swing trading it. So daily time frame still has it that yeah, we are still on sales, but then the structure is a bullish structure. But then we have sales going on currently, and the sales is not done because market cannot just keep going down or keep going up without having objections from either the bullish or the bearish sides. Now we'll check the 4 hour time frame. Now I want to be sure that we are actually in line with the trends. We've seen that yes, the market has been selling. There is no shift in structure yet towards the upside for us to have to start buying. Now, to confirm that we are on a bullish trend, look at this move. Yeah, look at this move, this sweet move. We were on a bullish trend before until something happened. Until something happened. 4 hours is beginning to show you that this is what it is. Something that happened, what happened? There was a break below. There was a shift in structure, trend termination. The trend was destroyed here. Look at it. This was where the shift occurred. The shift occurred somewhere there. And then it shifted the price from going up for now towards the downside. Look at that shift. There was a touch here. This is the place I'm talking about. Although it has a previous touch. And now the market broke below that place. That was why we realized that, oh, at this point in time, we are heading down. And then it started giving us higher lows and lower highs, lower highs, higher lows, lower highs, higher lows, lower highs, higher lows. At that point in time, we are now thinking, oh, what should we do? Should we buy or should we sell? Now, if we pay attention, we realize that we are actually in line with the market structure from the higher time frame. Now, the overall structure of this market is bullish, but we have not seen any reason to start buying until we have this. Mind you, this is a trend. No matter how small this trend might look, if we do not see a breakout, if we do not confirm a proper breakout above here, that breakout must cover here. If we do not confirm a proper breakout above here, trust me, this market is still very much down. If we don't confirm that breakout, the moment we spot that breakout, we're heading back up. That means we are following the overall weekly and daily structure, like the overall move. But this thing that is happening here is just retracement, correction, corrective move. And this retracement can actually make you a lot of money. It has made people a lot of money. So I pretty much got into the sales from here yesterday and then it dropped down. So now that we've been able to confirm all of this, let's go to 1 hour time frame and see what we'll be able to, bring out from 1 hour time frame in order for us to find our area of value where we are likely to get into this market. At this point in time, what we'll be doing is to pay attention to the active structure. Right now, we've seen that okay, we are on sales, right? This is the active structure on screen. It's quite bearish at the point in time. The market keeps breaking lows. Uh-huh. Keeps breaking lows. It has not given us any reason to buy yet. It keeps breaking lows. So basically, what we'll be doing more because one of the reasons why we would be selling this market is also due to what is happening now in British, in the United Kingdom. There's a whole lot of protest going on there, and we all know that where there is protest, there's not going to be inflow of economy. Economy is not going to flow very well. Investors, some companies might not open, some businesses might be on temporal hold. Like things would move a little bit slow, and at that point in time, the company will start losing. Sorry, the currency will start gaining weakness because of the economy and due to low, should I say, low, what do they call this thing now? Let me just say low inflow of capital, right? Inflow and outflow of capital. At that point in time, you would be hearing something like the UK has lost maybe 12% of blah 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 due to this and that. That's because there is no much importation and exportation going on in the country at that point in time. So at that point, the currency is weak. So if it's weak, we are doing more of selling it. So right at this point, we've seen that this structure is quite down and bearish on the 1 hour time frame. So we do more of paying attention to active structure, not forgetting the overall structure. Have it in mind, active structure, not forgetting the overall structure. The active structure right now is the bearish structure that we have on our screen. So if this market, we've conditioned ourselves to say that if the market does not break above this place and go up, there is no way for us to keep buying it and holding it for long. We might get into a buy. If we get into a buy now and this market gets here, what if it sells and they start ranging? That buy too still makes sense. Some people might get in here right now, set their stop loss somewhere here, very tight one, and then take profit above. That's a perfect 1 to 2, and they'll allow it to move, and it will move, and then it might range and range and range and range, and then finally probably break above or break below. Either ways, one of these things would definitely happen. If it doesn't break above here, it will still break below this place and then sell down automatically, depending on what's going on in the UK. Now, why do I keep mentioning UK? Now, we cannot completely talk about technical analysis without bringing in the effects of the fundamental analysis into play. I think I have to quickly plug my laptop before it goes off and it was. I'm coming. All right. So we can't completely talk about technicals without mentioning fundamental analysis. The fundamental analysis It's just the basics of the country's economy and how it affects the currency, because these things we are trading now is a country's currency against another country's currency. And then if one currency of the country is weak, the other one gains strength. Automatically, you have to understand when to get into the market based on which of this currency has the highest strength and the one with the weakest, uh, the one that